Hello everyone, welcome back. So in the previous videos we have known about the Dow theory. In this video we will know about trend line and supports and resistances. Now what is a support? Suppose the prices of a stock or index are falling. As the price falls, we can see that around a certain point the price starts bottoming out and the price may reverse from that zone. This becomes especially important when we are already in an uptrend and we see the price coming back or pulling back downwards. Then at certain point the price bottoms out and then the price resumes its upward journey, and then again the price falls and again resumes upward journey. Similarly, in a downtrend, what happens is that when the prices are falling, after that there is a pullback, and during the pullback at certain point the supply and demand of the stock or the commodity are matching, and after that the selling pressure increases and the price fall again, and after a substantial decline again there is a pullback, and at certain point after the pullback, when the supply becomes higher than the demand, the price falls again. So these zones where this pullback ends are again resistances, because price fails to go above that zone. There can be various ways in which these supports and resistances can be perceived in the market or calculated. One of them is the trend line. Now you might be wondering, what is a trend line? Trend line is a straight line. So in an uptrend, how do we draw trend line? When in the uptrend we see that the prices pulling back after some kind of up move, then from a particular point the price move higher, and then again on the second pullback the price make a new low. Joining these 2 points we make a trend line. Now a trend line is formed. Now the third time the price reach in the pullback in the vicinity of the trend line, two things can happen. Either the trend line can be breached, or price can take support at the trend line and then resume the uptrend. If the uptrend is resumed after taking support at the trend line, then the trend line is validated. Now a trend line can last for quite a huge number of days. From few minutes to few years we can have various kind of trend lines. The number of times a trend line is validated, the importance of that trend line increases. Similarly, in a downtrend, what can happen is that after the first down move there is a pullback, and after the second down move there is again a pullback. Joining the tops of these two pullbacks we can draw a downward sloping trend line. Now as soon as the third time the trend line is reached, the price can actually break the trend line and go higher, or it can take resistance in the trend line and go lower. So if the trend line is actually validated, that is the price take resistance in the trend line and after that the price goes down, then we can say that the trend line was validated, and the next time the price come in the vicinity of the trend line, someone can look for shorting opportunities, that is selling the stock near the trend line and booking profit when prices come down much more. Similarly, for a buying trade, near a trend line someone should buy, and actually when the price go much higher someone can book profit and still wait for the next time the prices to come near the trend line to go long again. Now I would like to repeat the point again, that longer a trend line is being validated, the importance increases. And suppose we are looking to a trend line which is there for almost 5 to 10 years and it is being validated, then the importance of that trend line is very high compared to a trend line which is there for few weeks. And once the trend line is broken, the previous trend line, becomes the resistance. Suppose there was a supportive trend line upward sloping, it is broken, it becomes a resistance. Similarly, there was a resistance trend line downward sloping or anyway flat trend line. Now once it is broken and the price goes above that, when there is a pullback, that trend line acts as a support. So this is the duality of the trend line, because if an important trend line is broken, it is not only a time to actually take a reverse trade, but also if there is a pullback, a reverse trade is taken very nicely. Now we will look at few of the examples in the investing.com charts, and we will find how what we have discussed is actually implemented in the market. Here we are looking at Nifty 50 chart. This is the monthly chart. Now you can look at this trend line and you can understand that this trend line is almost 10 years long. So as long as this trend line is there, we can understand that whenever this comes here close to the trend line, there is always a buying opportunity with a stop loss. But if the trend line is substantially broken, then there would be an opportunity to go short below this trend line, below this supported trend line, with a stop around this trend line. Now this is a very longer term trend line. Let us look at some of the shorter term trend lines. Now this is the daily chart of Nifty. Here you can see that when the up move started, this line was acting as a supportive trend line. Later the up move lost a little bit of momentum, but still the up move continued. Here you can see next this trend line was drawn. Now what you can understand, it is not always necessary to draw a trend line from the first point only, because you could draw this trend line from the beginning of the trend, that is okay. But here the other trend line that was drawn after the move matured a little bit, and you can see how much the trend line was validated, how many times. It was validated multiple times, and any pullback to this trend line was good buying opportunities. And now here you could see that the trend line was actually breached and price came down. So when you are looking at a shorter term chart, like some weeks chart or some days chart or even an hourly chart, you have to draw the possibilities of multiple trend lines, and not always the first trend line is important. A trend line that is joining multiple lows which are from latter, like this one, can also be important in trading. So as long as the trend line is validated, you can take buying position around the trend line with the support, and once it is broken, someone can take a short position. And from this example, we also know that once a particular trend line is broken, that can be due to the fact that the up move is becoming less fierce. But that doesn't mean that the up move is over. Like here in this case, initial up move was very fast, but later the pace of up move came down. So the trend line was broken, but still the up move continued. Similar can happen in the case of down move also. Now we are looking at the Infosys monthly chart, and this chart shows multi-year movement of Infosys, and here you can see that a trend line was formed during the first pullback around 2008 and the next pullback around 2013. And see, now in 2017, when this trend line was validated, how the price moved from 890 odd levels to almost 1200 levels within few months. So here the trend line was validated this way. So that is most important facts about the trend line. If the trend line is a very long termish, they act a very good support or resistance when we are taking care of them. Now when we are talking about trend lines, we can understand that they are one of the most important way of understanding where support and resistance can arise. Now, this is not the only way. Support and resistance can be actually calculated by multiple methods, and that requires knowledge of various other aspects of the technical analysis. Those things we will cover in the coming videos. Thank you for watching this.